Good morning, traders. It's Ben Nathan here, coming to you on the 11th of September 2017, and it's great to be back. So we've all had pretty much a month off from trades, which is fairly usual for the summer period, and now that's ended and the kids are all back at school, things are slowly starting to pick up in the markets again. So rather than be your usual daily analysis, the aim of today's video is to get you up to date or up to scratch with where we are in the markets as it stands now. So you've got a solid picture on how and where to be looking to get started as you get back to the charts. So what we're going to do, we're going to go through each major currency. We're going to have a look at what the strength or weaknesses are both for short term and the long term, and then we're also going to have a look at any key releases that are due out this week. Okay, so naturally we'll start with the US dollar, and the long-term bias for this is now neutral. We were looking quite bullish because we were in a rate hike cycle, but the hike expectations are fading bit by bit. The Fed are highlighting that we need to be very patient when it comes to the expectations of these rate hikes, and that it's wise to wait and see what the economy does before they go ahead with any hike talk at the moment. Now, the last thing of note that I picked up on was during the Jackson Hole, and essentially what the Fed said was the economy is strong, the labour is strong, but inflation is a complete mystery. So inflation is weak and they just simply don't know why. So with that in mind, we're more neutral in the long term on the US dollar, at least until data becomes a little clearer. Short term, we're looking a lot more bearish. So, those fading hike expectations, also the hurricane, it's all weighing on the US dollar and causing a little bit of trouble for the currency at the moment. In terms of news, we've got a fairly busy week with several key inflation-based readings coming out. We've got Wednesday's PPI, Thursday's CPI, and Friday's retail sales figures all hitting the US dollar. So next on the list, we've got the pound. Now, long-term wise, very much neutral. Prior to the last couple of meetings, we were expecting the next move to be a hike discussion. But since that, they have highlighted Brexit concerns, and they acknowledged the fact that inflation has been up, but also said that the reason for that is probably more down to just the fact that the post-Brexit weaker pound has enabled that to happen. So they have been significantly less hawkish than expected. Rates are on hold, and therefore we remain neutral in the long term. In the short term, we have had some news. We saw some solid industrial production data pick the pound up. On top of that, the market seems to have latched on to the fact that there have been some Brexit negotiations, and using that word negotiate, it has given some of the investors in the pound a little bit of comfort when it comes to the Brexit woes. So the pound's been a little bit more bullish of late, and we've got key news hitting the feeds on Tuesday in the form of CPI data. Then on Thursday, we've got the monthly Bank of England releases, so monetary policy, rate decisions, etc. So in particular, we're listening out for what they say about inflation. We want to know what their outlook is on that, and also whether they'll resume talks on the rate hike cycle at some point in the near future. Right then, so the euro's next in line. Long term, we're bearish. So QE, it's still in play, guys. Ultimately, the currency is weak fundamentally because they're having to pump money into the economy each month to at least try and strengthen it. But it's just not happening as much as they want it to be. Now, Draghi does keep saying that there's a lot of uncertainty in the markets around inflation, and that a significant degree of accommodation is needed, because if they were to stop helping the currency out, the inflation would not naturally continue to grow. So we're very bullish when it comes to the fundamentals, very bearish when it comes to the fundamentals. So that's bearish fundamentally. But in the short term, there's been some slightly more positive sentiment coming from traders. So a lot of focus seems to be on what Draghi doesn't say as opposed to what he does say. So, take the Jackson Hole Symposium. rather than the markets focus on the things he said, they just focus on the fact that he didn't try and talk the currency down. So the markets are basically latching onto his lack of concern about the appreciating euro. News-wise, we've got a fairly clear week today on that currency. Moving on to the CAD. So we saw a rate hike in September, which did strengthen the currency. From a fundamental point of view, it was pretty much a coin flip hike. So it could have gone either way. So it wasn't really a convicted rate hike as such. Now, what we know now is that they are watching Labour. There needs to be some wages growth before they're going to consider further hikes. So we expect rates could potentially be on hold for a little while now until those wages pick up. So for now, I'm neutral until further Bank of Canada releases. Short-term wise, though, we're bullish. So we did have that hike, which was supported by strong GDP, and crude oil's been looking better as well. So we're pretty bullish in the short term. Now on Wednesday we have got the crude oil inventories. A good one to watch. So, if those inventories come out showing significant drawdown, that's going to add further fuel to the CAD. Moving on to the Swiss. I don't really trade the Swiss, as most of you know. So we're just going to highlight that one in red for now. Essentially, the bank keep barking, saying that the Swiss is overvalued by 10% and that they're ready to intervene. Nothing's happened as of yet, and it's the same threats we've seen for the last 2 years. So very much neutral on the Swiss unless they actually do turn around and take an action. So they turn around and cut rates or hike rates, or just do something rather than talk the markets down or up. We have got their monetary policy meetings coming through on Thursday. Moving on to the Aussie dollar, so very much neutral. RBA confirmed that they prefer a weaker currency. That they are happy to intervene if extreme measures are needed, but for now they're happy to be patient and leave rates as they are. They're fairly optimistic on the economy. They just noted some slow income growth in August, but overall very much a neutral currency when it comes to the long-term fundamentals. Short-term wise, we're a bit more bearish. We had some weak GDP figures come through, as well as weak retail sales that are weighing down on the currency. But then on Thursday this week, we have got the important unemployment figures coming through and hitting the markets. So that should give us some further clarity on the direction of the Aussie dollar. Next in line, we've got the New Zealand dollar. So very much neutral. Rates are on hold. And we had some expectations of a 2019 rate hike. Now that is still on the cards. However, they have also said that they are also open to intervention, and they have said that really a weaker New Zealand dollar is needed. Now there's nothing confirmed in terms of a rate move, so we're fairly neutral long term for now, but because of those more dovish comments from the RBNZ, we're looking at a bearish currency in the shorter term. And finally, looking at the yen, we're very much neutral on this. Rates are on hold. They're maintaining their current QE. Neutral in the short term. Basically, we're waiting for some data. We did have an inflation miss recently. It failed to spur the yen down significantly. What we're noticing is because of the geopolitical concerns, we are seeing lots of safe haven flows in and out of the yen, and also in and out of the Swiss. So I'm being very careful of those two currencies, at least until we've got some sustained data that has a sustained reaction on the markets, and some clear direction from the central banks of those currencies. So that's it, guys. That's where we are now. So in terms of the live trading group on Skype and also on the dashboard, a couple of things to look out for. So definitely, if you remember, make sure you keep an eye on your Skype. So, the first thing that's going to happen whenever I post an update in the room is going to be a Skype pop-up. That's the first thing you're going to see. Along with that, you're going to see links to where I've posted those updates to, as well as passwords to access them. So Skype really is the first port of call when it comes to monitoring the updates from myself. So do keep an eye out on that. You know, Skype's pretty good in that you don't see lots of pop-ups. You can keep it open on your mobile device. Just set your status to away or busy, and then you know people won't bother you, but you'll still get those pop-ups whenever there's an update to the service. So other than that, guys, the only other announcement as such is, you know, www.bennathanfx.com is now live. So if you haven't had a look at that, do feel free to have a look. So it's www.bennathanfx.com. So that's live now for you to check out. You know, at the moment, the part-time trade is being hosted there, as well as, you know, the live traders chat room and the private coaching. So yeah, have a little look and let me know what you think. There's going to be regular blogs there as well. Some of it's going to be entry level. There'll be the occasional sort of mid, intermediate level as well. But just have a look and you know, see what you think. The private coaching is something I've been pushing quite hard as well. So we're having some really good results, guys. You know, there's a few people tracked on my FX book. Check those out. It works really well. So if you're looking to take more of a career-based route, then it's definitely something you should be looking at. And you know, the long term is going to probably be a cost-effective option as well. So, you know, if you're a current member, let me know. I'll always talk a deal with a current member. I like to look after my students. So do let me know if you want to talk that. Final thing to go through then is 2 tips. So 2 trading tips that will help you get better at trading or reading the markets. Both of these tips come from some of your fellow students. So the first one, for those of you keeping a sheet like this one, where you've got a list of the long and short term directions, and you're looking to piece together strong with a week, which is the best thing to do. While we're currently going through some geopolitically inconsistent markets, it's better to trade the hotter stuff. So what you want to do, if you're keeping some kind of trading diary of what the currency is doing, or if you're just following the currencies that I update in the analysis in the Skype room. Now, all you want to do is on your spreadsheet, just on the the releases of the day, just highlight that in green, and then on the next day, so day 2, so the next day after the release, just change that to amber. Okay, and then on the 3rd day, take the colour out altogether. So the idea being, what you'll have when you glance at your spreadsheet as you build this, if you are keeping one, is you'll have a running updated version of an at-a-glance look at what the most recent moving currencies have been over the last day or the last 2 days. And the idea is, if you take the green and amber currencies and piece those together to form trading pairs and direction and ignore the rest, while you're going to have less currencies to watch, the currencies you do watch and trade are going to be a lot tighter in terms of their trending, and you're going to have a better hit rate. So you'll have less trades but a higher hit rate. And that tip came from Tim, who's one of the private students, and is showing some really optimistic, optimistic improvements. It's looking good for him. But that is one of the things he's been doing, and he's had some good success with that, and it's something I'm doing as well. So yeah, that's a tip from Tim. Now the second one, which came from Jerry, you'll probably know Jerry in the room, and it's a conversation between Jerry and Tim. And one of Jerry's outlooks, which I think is absolutely fantastic and should be used by everybody, is that whenever you take a trade, so just before you hit the order, ask yourself, how would I explain this to an investor? So could I stand up in front of some investors and trade their money and explain why I'm taking this exact trade? If you can't do that, then the chances are you're taking a bad trade. So I know from conversations with Tim, one of the things Jerry does on a regular basis is when he takes a trade, he records a video. Just talking to himself or to the screen about the trade and why he's taken it. Now you'll be amazed at how many trades you'll stop taking when you do this, and the trades you do take, you're going to have a much higher conviction. So, a really fantastic tip. So if you can incorporate just 2 things for the rest of the year, do the colour coding from Tim, so knowing what releases or what updates are fresh, as in 2 days old or newer, and use those to form pairs. And then Jerry's tip of really analysing what you would say to an investor about the trade before you take it, so you know that there's a solid reason behind it and it's going to give you conviction to ride the trade out as well. So those are your tips as we enter the last quarter of the year. So things are all back to normal now in terms of room time. So Mondays we don't do anything, so there's no updates on Mondays. Tuesday, Wednesday and Thursday, the updates and setups will be in the room usually by 9 AM UK time. I'm going to start trying to get them done a little earlier, but again you'll have a push notification on Skype to let you know when they're ready. And Friday, if there's stuff going on, there'll be an analysis. If there's not too much going on, then we'll take the day off and enjoy our elongated weekend. So Tuesdays to Thursdays are always going to be the days where there's more going on. Mondays, always a day off. Friday, 50-50, it depends what's going on in the markets. In either case, guys, there's going to be an alert in the Skype room to let you know, there's an analysis on the way, or whether there's not an analysis on the way. Generally, if there's nothing going on, there's no analysis. If something's happened or something's going on, then there's going to be an analysis to show you through what's going on there. So good luck for this quarter, guys. Great to be back. Looking forward to catching up with all of you in the room, and good luck with your trades.